My name is Jonathan Swift and welcome to the latest Insurance COVID cast brought to you by Insurance Post and Insurance Age. And today we have another special linked with the publication of the Insurance Post and Sonar Top 100 Insurtechs, today focusing on businesses that have AI and data at their core. Now I'm delighted to say, joining me for today's COVID cast, I have Concirrus CEO Andrew Yeoman and Cytora CEO Richard Hartley. Welcome both of you.
Good morning. Thank you for having us.
So, first of all, if I can come to you, Richard, can you just give us a general kind of view of what have been the most significant developments within your business over the last year?
Definitely. So, we've kind of, I guess, continued to deepen our kind of engagement with our key customer base. And just to kind of, I guess, remind listeners, we're really focusing on the commercial insurance space and specifically underwriting, helping them underwrite more accurately and more effectively. We've seen really valuable proof points in both reducing the underwriting expense ratio and driving more profitable growth. So that's been really, really good to see, because at the core of, I think, providing technology to the insurance industry is generating measurable value and being able to kind of prove that you are doing that. So in certain examples, we're seeing the underwriting capacity of our customers increase by 30%, which is really great for us, and it really, I guess, fortifies our belief in the amount of value that can be realized by our customers. Alongside that, we continue to actually grow our customer base and our partner base, really focusing and consolidating in the SME and mid-market area of principally the UK. And then we raised our kind of Series B of 25 million in venture capital around 9 months ago, which allowed us to really accelerate our product development roadmap. And I think it's kind of validation of the momentum we built up and the level of industry alignment that we have at this point in time.
Andrew, what's the last 12 months been like for Concirrus?
It's been a roller coaster, I think. Hold on tight, hair on fire. No, it's been a fascinating time. Echoing much of what Richard said. So from our perspective, the sheer volume of engagement that we've had in the industry has been fantastic. Our products and our market is in marine insurance and transportation has definitely accepted the role that we play. We added probably 20 customers in the last year, which is fantastic to see. We've had a diversity of products now being introduced. So we've got marine, we've got cargo, we've got our transportation, and I think the last part is the last part in terms of that is the capability of the underlying sort of AI and machine learning. And again, this is something that Richard would probably echo as well, is that the sheer amount of data out there and the capabilities of the modeling technologies as a whole are fascinating to watch. We as a company are making rapid progress. And directly echoing what Richard said, we also did a Series B funding, which we closed in the middle of February. So we're very fortunate for that timing. And much like Richard, we're enjoying the opportunity to deploy that capital to accelerate the market more widely.
Can I ask, Andrew, obviously, along with many Insurtech kind of businesses, I suppose, you are seeking to change and shake up traditional insurance practices and processes. How amenable have you found the sector to accommodating your ideas?
Well, it's a good question, actually. So, we don't really want to shake up the industry. We differentiate between what we call efficiency and effectiveness. So the marine industry is one of the oldest sectors out there. It's 300 years old. And the market, broadly speaking, works. People can place business. It's well regulated. They share the business around the market through subscription or through reinsurance. And the market's regulated such that in the event of a claim, the money's there. There's just that small gnarly point of profitability. So if you take profitability out of the equation, nothing would need to change. If you put profitability back into the market, I think the marine market, I think I'm correct in saying, has only been profitable like 2 or 3 years out of the last 15. So there's obviously a systemic issue, and that's around around efficiency. And so the market's very effective in how it writes business, but it's not very efficient in terms of cost of acquisition and operating costs. And it's a message that's across the industry. So we're seeing that Lloyd's themselves with their Decile 10 initiative, and organisations generally are desperately looking for ways to become more efficient. And then that sort of coincides with the fact that the last 3 months especially have very much ended this digital debate. Should we digitize? Shouldn't we digitize? That debate is now over. And I laughed and think to myself, if I'd have gone into the Lloyd's market and sort of rung the bell, I would have stood there in the middle of December and said, "Okay, I have a dream. I have a dream that by the end of March, we are going to work entirely remotely, and the 1/4 renewals will be done remote. Nobody will need to go into the office. We'll all be sat in our homes, and it'll be done digitally. It'll be smooth, and nothing will go wrong." I think you would have been probably handcuffed and escorted from the building for so many reasons. Here we are. And the 1/4 renewals went really well. The use of things like PPL and those platforms has been up. So that's really ended the digital debate. So with the digital debate now ending, the next question is what can be done with all of this data? And again, we are seeing data-driven conversations come into the market. And because we are essentially making the underwriters smarter and these organisations more profitable, I think that the notion of whether it's are they welcoming, are they amenable, that's really a non-issue, because it's absolutely yes. It's the only future model that we can currently imagine.
Yeah, Richard.
Yeah, so I can support all of those comments. I think the industry acknowledges that when you have expense ratios, just under 50% of total premium, it's very difficult to innovate. You just don't have the investment ability to do that. And I think it's idiosyncratic. I think it's very hard to find any other industry that has expense ratios of that level. And I think insurance CEOs, they understand that, and they're looking to resolve that issue. I think there is a future of technology where it is riding sidecar with the underwriter. It's enabling the underwriter. It's empowering them to make better decisions, faster decisions, to actually do more. And what we often get from underwriters is a real sense of excitement about that vision, because clearly in underwriting, the level of uncertainty is so great, where human judgment is absolutely required. And what the technology can do is just, it can enable underwriters to make better, faster decisions. And I think that the value for the insurance company is essentially, firstly, you can write more business, because if your expense ratio is lower, you can go into new lines of business that have a higher loss ratio over time. You also get a diversification benefit from that. But secondly, to Andy's point, you can invest your capital in new areas, because it isn't constantly going out the door every time you bring in new business. So I do think that kind of future has been accelerated in COVID. And I think there are also major aspects of why the insurance industry is great, and always has been great, that will perpetuate long into the future. So we kind of see ourselves as enabling that. And I think absolutely that's really, I think it's a very positive thing for the industry at large.
So Richard, I mean, both you and Andrew have mentioned obviously COVID-19 and the pandemic. Obviously, we're currently in lockdown in our homes. How has your business adapted to that? I mean, I know that obviously there's lots of opportunity out there. Are you finding it, actually, can you take advantage of the opportunity at the moment? Are you finding you can win business during lockdown?
Yeah, so I mean, from a kind of, I guess, just a company sector perspective, we're a technology company. So we're actually very well suited to working from home. Software engineers essentially do their work on a computer, and they communicate over instant messaging. So all of that, I think, is absolutely fine. And we found, certain personality types who like to get their head down and really enjoy kind of, I guess, writing code, they actually love this period of time, and it's going to been interesting. For me personally, I often get my energy through conversation. So I think kind of depending on your personality type, you do have to adjust. I don't think there's a kind of perfect translation of the kind of offline world into more of the virtual world. I think you do actually have to change fundamentally what you do. In terms of our engagement model with clients, what we're finding is at the beginning, absolutely, I think first kind of 2 to 4 weeks, a lot of clients are really focusing on how do we just make sure our underwriters can work from home effectively? How do we make sure our call centers are set up and working from a remote environment? So there's a very kind of tactical, operational focus on let's make sure business as usual works. And then probably for the last 6 weeks or so, we've seen a real acceleration in insurance companies wanting to re-platform and also improve underwriting productivity. And I think they're kind of spurred really by this opportunity to radically revise their cost structure by virtue of some of these enablements we've talked about, digital communication, digitizing core processes. I think it is a kind of probably a once in a, I wouldn't go as far as like once in a century, but certainly a once in a decade opportunity for the insurance industry to quite radically and in a single moment change what they're doing. And our customers are responding to that, and we're having very positive momentum in enabling what they want to do in their underwriting workflow.
Andrew?
Yeah, again, we're probably going to have to stop saying this, echoing each other said, but we're both technology companies, so there's some similarities. So as a technology company, exactly as Richard said, we very comfortably adapted to being remote. We've seen productivity levels rise within the organisation. We've seen our QA of our software improve as well. So I had this very odd occasion where I was like, okay, what you're telling me is we've delivered this early of a higher quality into QA than normal. That's interesting. Yeah. So that's been good. I think there are other aspects to this that we've had to consider, which is the mental health and well-being of employees, and that's something I think is common with all organisations, irrespective of what they do. Is you get a bit zoomed out, so there's only so many Zoom calls you can do during the day, and it does affect the culture of your organisation. So we, like almost everybody else, we've worked hard on creating sort of quizzes. We've done through the keyhole kind of approaches. We've encouraged people to take more time off. We've given people more holiday because people were hoarding their holiday for when normality, whatever that looks like, returns. So we've done things like that, really to just focus on the individual sort of health and well-being. And we had a couple of susceptible individuals who we had to spend more time on. So that's been a challenge for us. Into the market more widely, again, we saw two sides of the same coin come into play. On one hand, the amount of interest in our product, just sort of exploded. I think our pipeline doubled in the last few weeks. And we've seen a very interesting dynamic, which is there's more urgency in the market for them to deploy solutions, but there's more scrutiny in their evaluation at the same time. And that whilst those things seem to be in opposition to each other, they're playing out quite interestingly. And at a very sort of human element to this is that we when we designed our technology, designed it to be browser based and allow data to be shared, but we never envisaged that it would be shared because everyone was working remotely. But actually, having a technology platform that allows people to collaborate around a single sort of digital view of risk has been tremendously useful for our customers. And we've spent a lot of time in the last few weeks just understanding the use cases of just at a detail level. How are people using the technology? And are there small improvements that we can make that allow it to operate in this environment more effectively, and allow people to operate more effectively? So that's been it's a fascinating exercise. And actually both our team and our customers have responded really well to that. So it's been something that I wouldn't have wished on us, but I wouldn't wish it away either. So it's been a fascinating time.
It's a really interesting point on collaboration, I think, because it is quite unique, I think, that you have an industry where the actual manufacturing of the product is quite collaborative between the broker and the underwriter. And then often on the underwriting side, for more complex risk, it's often, again, quite collaborative, especially between, say, a junior underwriter and more of a senior underwriter. So these kind of, I think these opportunities to kind of replicate or even elevate that through technology, I think are absolutely there. I think hopefully over time that should also it should help shortening the time to productivity for a new underwriter, which for many insurance companies today, even if you're hiring an underwriter that does have experience, it takes between a year and a year and 6 months to get an underwriter up to speed. So there is, I think, real opportunities there to kind of contract that.
Can I ask, do either of you have fears that, hopefully when the pandemic kind of dies down, that things will just revert to normal again? Or do we think this is kind of a kind of sea change moment, to use Andy's business, as a terrible kind of metaphor there? Is this a sea change, Andy? Do you think so?
I think that so I'm right in the middle of some strategic research at the moment. I've taken time out to actually contact the industry. I'm in the middle of doing like 50 interviews with people, trying to get my own view on this one. But the overwhelming consensus of opinion is that we won't return to where we were. So the role of the office is going to change. And Richard mentioned that he takes his energy from the interaction of the people. I'm much the same. I miss that social interaction element of it as well. But I can't see that it's going to spring back to where it was. And certainly as a company ourselves, we've proven that actually having a team that's remote works. Now it might be that it works because they can't do anything else, so they might as well work there. And if it was sunny outside and you could go into all the parks and all the bars and the pubs or things were open, who knows what the difference in productivity would be. But actually what we've had to learn isn't so much how do we work remotely, but actually how do we manage remotely and how do we sell remotely and all of those good things. And so how we look at productivity as a team and help people through that has changed. And I think that's going to persist for us. And I think the role of the office as the default location for everybody, certainly in my mind, that's changed. We're now looking at we're asking questions which we never asked before, which is what's the point of having an office? What's its purpose? And it centers the organization, and it's a cultural center, and it's a point of interaction. But actually, are we going to compel everybody to be there? And so what I see what I hear, I should say, when I talk to people in the industry is those same questions are being sort of echoed, both in the technology industry. We've seen big companies like Facebook and Twitter come out, but also some of the big insurers have said, actually, we're not going to return to that. And I've been really enjoying, at a very personal level, I've been enjoying a much better sort of work-life balance. It took me a little while to get my head around it, but actually I quite enjoy getting up in the morning and going for a run, and being able to leave my desk and get back into the house and be back there in 5 minutes, and that's worked really well. I'm sure that that's something that's that everybody through the industry will appreciate, and especially in an industry which is it's the last bastion of paper and face-to-face sort of dealings, to be faced with purely remote and seeing how it's adapted is going to challenge many people. I'm sure there'll be some people that will yearn for the past, for sure. I mean, I absolutely miss sitting in Leadenhall Market, having a nice lunch, having a chat, maybe with a bottle of wine, whatever. I'm up there, I put my hand up. I absolutely miss that. I think there's a balance to be had, isn't there?
Richard?
Yeah, so I agree from the perspective, I don't see this going back to how it was before. I think it will be more of an engine. So I think similar to the advent of the internet and how that changed underlying interactions, it had a kind of massive sociological impact. I think we'll see the same here. And I think we don't know exactly what that looks like right now. But just a few kind of hypotheses. I think it may change the way trading is done between brokers and underwriters. It may change the actual the way the insurance product is configured. It may change the way kind of underwriting is done. For example, it could become a lot more collaborative. For example, it could change the way kind of performance measurement and management is done as well, because you're equipped with more data. So there's all sorts of, I think, opportunities, and I think there will absolutely be winners and losers. That there'll be some insurance companies that have a clear view of the future and they seek to build it, and there'll be other insurance companies that are more cautious, and that's okay. I think there's always more risk in kind of moving things fast, and obviously the longer you take, the more you can learn. But I believe, irretrievably, it won't go back to the way things were. And we've heard it, from our team, people, I actually think I'm in the minority where, like, I love meeting people, I love chatting, I get creatively inspired through interactions. But maybe just compositionally, 75% of our team are software engineers, product managers, data scientists, and they're much more productive doing what they do. And when you think about the kind of two of the major priorities of people, it's your family and it's your professional work, and being able to do those in one place takes away a lot of the friction, which typically is a 2.5 hour commute, which is like, it's a major part of life. I mean, that potentially is around, it's around kind of 5 to 10 years of your life is spent in that thing. So I think there's a big incentive for people. I'm sure, I think whatever we come to as a hybrid kind of post-COVID, I think probably will be a better version of where we've been in the past.
So taking that all into account, Richard, what is on the to-do list for Cytora over the next 12 months?
So our focus, I think, is really continuing to invest and deliver value for our clients in terms of their underwriting productivity. That's our core focus. That's where we see their most acute needs being. What we want to do is help our customers kind of underwrite more efficiently, and really kind of get momentum on that journey to becoming more of a tech-enabled insurance company. And for us, it's allowing them, kind of targeting the right business that has the highest value for them, enabling their underwriters to increase their capacity. So they can, per underwriter, your underwriting capacity is increasing and your profit per underwriter is also increasing. And overall, as an insurance company, we're trying to support them in becoming more future focused. So instead of kind of, purely focusing on the maintenance of your core business today, really helping them as a thought partner to elevate their thinking and to reimagine what an insurance company can look like. We're really excited about that, and I think there's huge opportunities.
And same for you, Andrew. What's the next 12 months hold for Concirrus?
Yeah, so I think that the biggest challenge that we face is in the industry, just helping shape what this new normal is going to look like, because we have an opinion, the market has an opinion. So I think one of the things I'm most looking forward to is trying to establish that balance between where we were, where we are, and where we need to go. Whatever this next normal, the new normal, as it were, looks like. So that's that. I want to get back to the Leadenhall market, have some more cheese and wine. High on my list. And I think the other element is driving me. We've seen the introduction and acceptance to some of these sort of AI machine learning models. So these are fed by advances in technology and availability of data, both of which have progressed in the last 3 months and the last 12 months, and we're going to see more progression in that. So driving more sophistication in their models with more data and more intelligence, I think, is going to be hugely rewarding. For us specifically, we're we're expanding our product lines, we're expanding our technology footprint, and we're expanding our geographic reach. So those are important. They're important elements for us. And then, you know, the most important one for us as a company is supporting our team in getting back to the office for those that want to come. But getting people out of their bedrooms and makeshift offices as and when appropriate, and helping them safely come back to work in and around the office, whatever that looks like. So that's a priority, making sure that everyone is safe and well there as well.
Do you find yourself having kind of emails at strange hours these days, or is it as you managed to avoid all that kind of strange communication?
Strangely enough, my world seems to have become more disciplined, not less. Is that there was because I commuted from 6 a.m. And I left the house at 6 and I got home at 8 p.m. They sort of the working day was a lot longer. What I tend to find now is that I'm able to shut my laptop at 6 p.m. And not open it again. And I'm not quite sure what the difference is. And I haven't quite figured it through. And a part of me thinks it's maybe because everyone else is doing that as well. So it's an odd dynamic. I can't quite explain it, but I've got a very clear demarcation, certainly for me, between work and home. And that's helped. I mean, it's not the same for all of our team. And one of the things that they struggled with early on was, how do I know when to stop working? Because I don't leave the office. So we had to help our team how to understand how to end their day, as it were. I never thought about all the things I was going to be doing. One of the things I'm going to be doing is trying to encourage our team how to work less.
Richard?
I mean, there's definitely something in the point where you feel less of a sense of you need to have two starkly different personas between your personal life and your work life. And when you're in one persona, you feel a sense of guilt because you're not in the other one, so you're constantly having to kind of move between the two. And I think I definitely noticed I don't have that same kind of second almost voice in my head kind of thinking, oh, you should be doing this, or I've got to go and send that email. It seems just cognitively easier for me just to walk downstairs, make a cup of coffee, reflect on what I want to do in the afternoon. And previously, just when you're subsumed in your work environment, I found that kind of separation a lot harder, or you had to be a lot more artificial around it. So I don't know exactly why that is, but I probably just on balance feel kind of more productive and also healthier. And a bit more rounded as an individual. I think it's something where those two kind of almost artificially different personas are coming into one a little bit because you're in the same space. I think exactly for our team, I think we're helping. We're trying to really reserve judgment on what we should do, but have a really open kind of conversation about like what works for us. And I think it's a great opportunity to kind of move back to your values and say, okay, what do we believe in? What are our operating principles, and how are we actually going to perpetuate this in new forms of mediums? So one of our values, for example, is kind of impact, not ego. And another value we have is kind of slay dragons. So you're going to have these kind of points, and it's interesting because you're going to have to think about how do you codify them in a slightly different way. But it is, I think. I studied history when I was younger, and I think critical junctures are always productive. They're always a time when kind of new regulation happens or new structures can be built. So I think you have to be fundamentally invested and interested in the possibilities. I think if you do that, there's a good chance you'll create something that's different and better.
Okay, well, Richard and Andrew, thank you very much for your time. And also congratulations for obviously making the Insurtech 100 ranking. Thank you for watching. If you'd like to find out more about the Insurtech 100 ranking, then please check out Post online and in app. And if you want to subscribe or register for Post, then please use the tab in the bar at the top here. But until the next Insurance COVID cast, it's goodbye for me. Stay safe, everybody, and cheerio.
Bye. Thank you very much.